Welcome to the September 11th, 2020 video version of the Wagner Daily. My name is Rick Petticelli. Once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace as well as offers some insight as to how we set up our charts, what time frames and indicators we use. As usual, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll get into potential setups over the next few days. First up is the Nasdaq 100 ETF QQQ, which gapped higher on the open but failed to fall through and sold off the rest of the afternoon, closed about 2% lower and just above the 50-day moving average. Let's see how the Nasdaq reacts to the 50 by Friday's close. Moving to the weekly chart, if the Nasdaq were to simply chop around in this area over the next 2 to 3 weeks, that would be fine, as it would allow stocks to digest the recent advance, base out, and potentially form lower risk entry points. On the monthly chart, QQQ is less than 1% away from last month's low and July's high. So there is quite a bit of support, I'd say around this 266 level, if the price fails to hold the 50 MA, which at this point we could probably expect there's going to be some sort of undercut to shake out any remaining bulls and possibly attract some short sellers thinking that the market is going to potentially roll right over and touch the 200-day MA. Again, anything can happen, but we're currently looking at a normal 10 to 12% correction off the highs within a strong bull market. And on to the S&P 500, pretty much the same price action as the Nasdaq. No follow through on the morning surge, and from high to low, about a 2.8% sell-off, and the price is now just above the 50 MA, so we'd have to expect at least a touch of the 50 MA at this point. On the weekly chart, the price action has already touched the 10-week moving average, and as we mentioned with the Nasdaq Composite, few weeks of chop in this area would be fine. And moving over to the monthly chart, last month's low is about 1.5% lower, which is just above the high of July. So around 3,300, there's a significant support, so that would put support right below the rising 50 MA. And I'll comment more on broad market price action towards the end of this video. So let's get to open positions in the model portfolio, which there isn't much to cover here. We have CRM, which we purchased over the 2-day high. It opened higher and failed to follow through. We were looking for the price action to recapture the low of the gap up day, and it failed to do so. We have a stop on this position just beneath the 9.8 low. It's a half position, so it's not going to do much damage to the portfolio if it fails to follow through. And as for what we're looking at over the next few days, we're not looking to do much of anything. With the S&P and the Nasdaq near the 50 MA, we see no reason to establish short positions. And there's really not much to do on the long side yet, as there aren't many low-risk buy points around. So for now, we're just in S.O.H mode, which is sit on hands. Do nothing. Let's go through a few charts of positive action that we saw. DKNG broke out on a pickup in volume after a bullish 28% run off the 50 MA. So we'd like to see the price action just chop around for a few days. And this is certainly something to watch next week for a potential entry point. FVRR, bit of a false breakout on Thursday. Let's see how the price reacts over the next few days. If it holds above this 10-day MA or around the 117 area, that could be an interesting bull flag type look. However, if the price sells off back down to the 50-day MA, not what we'd want to see. BYND, also a big mover like DKNG off the lows, about a 25% move over the past few days. Cleared resistance intraday but failed to close above. So let's see what happens over the next 3 to 5 sessions. See if the price action remains tight, or does it give back the entire advance and pull back into the 50 or possibly even the 125 area. And ZM, which held up at the rising 10-day MA, but did pull back in about 27% or so off the highs. So it may need a few weeks of chop to produce a reliable buy point, but this stock is one to keep an eye on, especially if it can remain above the rising 20-day EMA. And WKHS tried to break out to new highs a few days ago, showing a ton of relative strength, but market conditions are not ideal for breakouts right now, so it struggled the past few days. Let's see if the price is able to push back above the 3-day high, or does it just continue to chop around, allowing the 9MA to catch up, which would be fine. What we don't want to see is the price retreat back down to the 50MA. And the last chart of the night is Tesla, which is currently in a 34% pullback to the rising 10-week or 50-day moving average. Generally speaking, when a stock corrects 10 to 15% off the highs, it may only need 3 to 5 weeks of sideways action before breaking out again. Once we get into 20-30% deep, the odds increase that the stock will need to build a 7 to 8 week base at the very least, which is what Tesla looks like it may be headed for. So it's probably best to avoid Tesla in the short term. And just back to the broad market overall, and going through our scans Thursday night, there's just not a lot out there in terms of low risk buy points in stocks that are ready to move out from a solid base. So for now, I think it's best to remain mostly in cash. Try to avoid making any dumb decisions that aren't planned out, any spur of the moment trading decisions, and just wait for market conditions to settle down and a little bit more bullish evidence. All right, so that's a wrap for tonight's video. Thank you for joining us, and we'll see you again next week. Have a good one.